So, hello everyone, hello Futex traders, and to the wider investment community that listens to us every week. I hope you guys had a good 3-day weekend. It was quite relaxing on my part. I'm sure a lot of us have used the time to relax and think about the markets a little bit less. But alas, tomorrow is Tuesday, and we're back for another busy week, hopefully. So I'm going to be taking a look at some of the event-driven risks and some of the market structures. Not so much on the data front. However, I'm just going to go through some of those things, and hopefully we can find a couple of cool setups to trade this week. So over the weekend, we haven't had any particular news. Um, haven't seen anything big with regards to Greece yet. However, we are looming into some really important deadlines. I think at the beginning of June, it's June the 5th, if I'm not mistaken, or possibly the week after that, we've got the first big IMF payment for Greece. So definitely keep an eye out on that because we're getting into really critical time for Greece with regards to them having some sort of deal. There has been a lot of speculation as to whether Greece will leave the Eurozone. There has been some mentions of some plan Bs. I haven't really seen the market, some of the main European indices react as such. However, you are seeing on some of these comments the actual the Greek markets, the Athenian index and some of their short-term dated bonds are, they're rallying in yields and collapsing uh, on the equity front. So it's not really, doesn't seem to be affecting too much some of our main equity indices like the Euro stocks or the DAX. But just keep an eye on it because if we actually do get a deal, I think that we could start seeing some decent flows come back into the market. Maybe just a little bit more, that little bit more confidence to give that, that bit of a kick to the upside. So just keep an eye on that just in case we do get anything this week. But you know, as of now, we don't seem to be having anything new. So Tuesday, coming into Tuesday, not much data on the European side. The first main data point is in the U.S. session. The U.S. durable goods, which the consensus for that is at minus 0.5%. We also have the U.S. services PMI, which is a preliminary number, consensus at 57. Now the services PMIs, they don't necessarily, I haven't really seen the services or the manufacturing PMIs in the U.S. actually move the market all that much, but I still do take a look at them just in case we get some massive outliers. Maybe the market does want to move. An important figure though, also on that day, is the U.S. Consumer Confidence Index. So the consumer confidence is quite an important indication as to whether the U.S. economy is doing relatively well, being as it's 70 to 80% made up of consumer-based demand. So definitely keep an eye on that to see if we continue to see strong consumer confidence or if we start to wane and pull back on that a little bit, which is going to reaffirm some of the weak data that we've been having. In which case, possibly we could see, the yields move lower along the longer end of the curve, and maybe the equities take a bit of a pullback on that. We also have the U.S. new home sales, keeping an eye on the real estate market in the U.S. And then from a central bank policy perspective, we've got the ECB's Fisco, which is a leaning dove, talking at an annual meeting in Rome. So just to take a look at some of the market structures coming into the week, I always look at the Eurostoxx 50 and the Bund, which are my two main markets that I trade. And if we just take a look at this Eurostoxx 50 and how it's shaped up coming into this week, we can see that last week we had that on the Monday, we had that fake out to the downside. We closed relatively strong, and then coming into Tuesday, we had a decent rally. But it seems in the last 3 days of the week, that rally kind of lost its energy, lost its bit of that power that we had driving into this area. We lost it a little bit towards the latter end of the week, possibly because we're coming into a 3-day weekend. But you can see here at the latter end of the week, we lost a bit of volume. So the bit of the interest, the interest up here has kind of waned a bit. So I'm just taking a look at that. Obviously, we have a inside candle between 57s and 82s. So those are the two key levels I'm going to be looking at coming into tomorrow. Obviously, for me, I do think that there is very good scope for this market to continue to the upside, being as we held strong support area. If you look back at my weekly roadmap last week, I was looking at the monthly structures, and we came off some really strong support down in here. Um, you know, some well, it was support and resistance in the years preceding, when we were trading in these areas. So definitely keep an eye on this, because it seems like it's had a bit of a lift off from that area. We seem to be consolidating in here. We could get that bit of a continuation to the upside. Now, on the contrary, now if we do start breaking to the downside, offering below 57s and holding below those 57s, coming down into these regions, there is a lot of untraded area in the past couple of days slash week. We haven't actually seen a lot of traded volume or done anything significant. We really vacuumed through this area really quite quickly. So if we do start making our way a little bit to the downside, I would imagine this market would tend to start auctioning lower, possibly test that inside week high at 36.11s. And a breach of that, really ultimately I want to see it hold at these 35.80s, which was that low and that gap fill um, of that day on Tuesday. So just keep an eye on that. Just before I move on to the Bund, let me just quickly pull up the market profile for the Euro stocks. Take a look at what that's looking like on a weekly time frame. So we can see the really key areas coming into next week. We've got the weekly value area high at 36.78. We have the weekly value area low at 36.32, just nestled in here. So really, you have your boundaries for the week. As long as we stay within this value area, I think the market can just continue auctioning within this area. It's lost a bit of its energy, so possibly do a bit of balancing. We've got a bit of a cave here in volume, a bit of a cave in TPOs. Not too big, really, but very low volume node at 59s. So if we do, let's say, false break those 57s to the downside, we don't get any particular volume through that inside day break, and then we just start creeping back up. Maybe we just start filling this out before we make move to the upside. That is a scenario that I'm thinking about in my head, because if we do false break those 57s, have maybe a 7 to 10 tick extension, hold above this VPOC at 50s, that's the weekly VPOC there, and then start making our way to the upside after having filled a little bit of this area, that would make sense in my head before making that ascent to the upside. Now obviously we would have to hold above these 78s and build a bit of volume or value just around this area before taking out these key 85s, which is a level I've been looking at. A lot of the traders at Futex have been looking at. And above there, obviously, there's a weekly high there at 94, it's just nestled in there. Before that, and after that, we can just make our way really to 37.27, just a weekly high, and then above that really is that swing high at 37.69, which is also a pretty bad high. Just keep that in the back of your head. So like I said, if we do start offering below there, holding below that VPOC, possibly we can start challenging that weekly value area low. Holding below that weekly value area low, and really there's not much in the way, obviously after those 36.11s, but for me, even we could hold those 36.11s, but just because we haven't done much volume in here, I wouldn't trust it all that much. Maybe on first touch you can get a nice little scalp in there, but once we get through there, this could just start auctioning, finding value, finding a bit of a base before it moves lower or back into this area to the upside again. So just keep an eye on that, because we have a really nice little structure in here. You can lean on two very key areas and just watch how the market auctions around them coming into next week. So taking a look really quickly for you guys, take a look at the Bund now. And in the Bund market, interestingly enough, we've got a bit of a again, another what I would call a 3-bar triangle formation. So we've got basically a day that's within the previous 2-day range. So we've one day in here, another day in here, and that Friday just nestled in below, in between that 2-day range. So it seems like this market's it just happened to have coiled again. Obviously, this is within a very large coil. We now have a double inside week. So we've got this week, which is within that massive week, and then this week in here is within that week as well. So we have 2 inside weeks. So there's a lot of consolidation, a lot of coiling, a lot of energy in this market. So really, If you are a breakout trader, we have seen a bit of waning volume, so just be careful with your breakouts. But if we do see volume, much like we saw in this breakout here, don't be scared to go with the flow. Now, in the very, very short term, um, you know, I, I actually, I think myself and a lot of the traders trading this day in here, we had a lot of whipsawing, a lot of, just very whippy, choppy price action, high to low, low to high, high to low. It was just extremely difficult to trade, and that's probably because we all had a bias. So I'm really going to try this week, after my debriefing of last week, to just not trade with a bias, even though in the very short term, this looks to me as if, we've made a higher swing low after a poor offer to the downside. We found a bid. So really it looks like we could find that bid up to the upside, which I'm going to be looking at this key trend line here. We found some support and resistance off that trend line. And once we start bidding above that area, possibly we can really test, not only the inside week high there at 77s, but that other in previous inside week high, which came in at 155.03, which is just above that really key 38.2% fib from the high. Watch out for these areas because obviously above here we could see some some big possibly some big stops. Not necessarily that they're just sitting there, but just watch out. Once they get above there, we could get at least manual stops. And also, we have a very low volume region in here, so it could really vacuum quite quickly to the upside. Nothing really stopping it until we get into this 50% region, which I'm looking very, very keenly at those 156 06s or 07s, which is a really key area for me. So I'm going to be keeping an eye if we get up there. The 38.2% fib worked, so I'm going to be looking at the 50% just as much. Now, contrary to the downside, obviously, if we start finding a bit of an offer, especially if we get below these 153.55s, which you see there's a lot of swing lows in there, and then ultimately, if we break this 153, the figure, which we've seen, once and twice we've held, which we've left a bit of a gap, closing gap down to 152.89s. Through that area, I do think there's going to be, people that have been building a bit of a long position in here, hoping that this market is going to continue its long-term trend. They're going to be quite weak. I'd imagine they have a pretty tight stop on that. And once it gets through there, we could see a bit of a flush. And ultimately, if we take out this area, breaking this trend line in here, we could start challenging the really, those really key areas, 152, the figure, and possibly even test down lower. So really, that was 153. The figure is a pretty key area. It's the inside weak low. Keep an eye on that level because there's probably going to be some decent auctioning. So there's some really nice key levels to be looking at in this Bund. If it starts moving and there's volume, I'm going to be trading with the flow. Obviously, I'm very wary of these kind of moves where you have these very crappy offers or really crappy bids. Just be careful because when you see that kind of price action, just let it feed into your plan. Let it feed into your scenario analysis. Why is this not moving the way I expect it to? Possibly there's something around the corner that I should be preparing for myself for. So we take a really quick look at the weekly market profile for this market. So we close in this region here around these 153.88s or so, or sorry, just above that, 89s. So that's where we closed on the week. We have our on the dailies. There was a very, very key 153.94s, which was these dailies, daily value area high and value area lows. That is also now our value area low for Friday. So that day alone. So I'm keeping an eye on that level. I'm obviously keeping out these 154 the figure just because it's our VPOC for the week. Now, if we open above this area, hold that VPOC, it's going to give me an indication, if we drive, because we've been seeing on the mornings, the market's been coming in and just driving. So if I do see that drive in the morning off of a VPOC, I'm going to be looking possibly for that continuation. Now, once we start bidding above these 154.18s, that could start giving the indication that we're going to make our way and possibly test that inside week high at 154.77s. And like I said before, that other major swing high at 155.03, just in there. So just watch out how that market trades there. Above that area, I think there's not much really holding this market. We've got some very low volume nodes in here, but ultimately, once we're back in here, I'm looking for this to fill quite quickly. You know, all the way up into this region, we've got a bit more TPOs. So just watch how that market auctions around that. Obviously, on the contrary, if we start holding below those 94s, that could give you a small indication as to whether we're going to make our way to the downside. Ultimately, if we hold these 153.44s, which is the weekly value area low of last week, you know, that could give you an indication that we're going to at least bid back up and auction inside last week's value. In which case, we're just, you know, ranging and consolidating. Um, and really, you're going to look for it to trade and build value outside of this value area before we see a break. Like I said, 153 the figure, inside week low. Watch out for that area. What's really nice about the fact that we've got this value area low in here is that we see a very quick drop off in TPOs and volume. Mostly the TPOs, they drop off really quickly, which I like because, you know, once we're below this area and we're building a bit of value, you know, I wouldn't see that as much in the way of this moving really quickly to the downside. Um, I know we do see a bit of a buying tail in here, but just the fact that we have, you know, very little value in here, and if it comes back and starts trading and auctioning in here, you know, that could be you could see a bit of a swift move to the downside. Just beware, just watch out for that. Ultimately, if we're moving very quickly down to these 153s, I wouldn't want to play the inside weak too quickly. Just it depends on the timing. You know, Lee Gibbs said this all the time. It depends on the timing of day and how we're trading. So, you know, if we make our way down, possibly build a bit of a structure in here and then break, you know, maybe I'll be looking to, you know, lay some size through this. But if we get there too quickly, you know, often you get a lot of people getting really excited about this break. It breaks, you know, for 5, 10 ticks and then, you know, bounces right back inside it. So just beware how you trade these levels. You know, the same goes for the inside week to the upside. Um, Beware. Depends on the timing. It depends on how it trades there, and you know, manage your risk and your money appropriately. Cool. So moving on to Wednesday, no real data points that I've been taking a look at. We do have, you know, a couple of little central bank events to be looking at. We got the BOJ's minutes from April the 30th. Just taking a look at that, possibly if we get any sort of mention. I know there's nothing really that I'm expecting, but I'm just looking at this dollar yen, and I was looking at this market coming into last week. And last week we actually saw a bit of dollar strength. And I was looking at the fact that, you know, out of all the currency pairs, it seemed like the yen was the weakest against the dollar, because we had you know, we'd broken down. Um, it seemed like we had, you know, we'd come up quite a bit in the euro against the dollar. The same goes with the cable. You know, we'd rallied quite a bit, but conversely, the yen hadn't really strengthened all that much. We just kept trading in this range, and now that the dollar is kind of strong, you can see that this has made an advance. It's broken its inside month, and it's closed. It's at the minute on the verge of closing quite strong for the month, relatively strong, and we're closing in areas that we actually haven't closed before. So just watch out, because, you know, these markets, they tend to start moving before something big comes out. So just in case, maybe in these minutes we get some sort of indication they're looking at further easing, any sort of accommodation, something that they mention, something in their voting structure, anything, any sort of indication that's going to give you um, something to lean on with that move to the upside, because we're having a, you know, really big flag below this massive trend line, you know, move through there, and this could start picking up some steam. So just keep an eye on that. That's something I'm going to be looking at potentially, you know, in the week ahead. So then we've got the Fed's lacquer, which is a voter and a hawk speaking in Louisiana. We've got the RBA speaker, Deputy Governor Lowe, doing his thing at this Thomson Reuters third Australian regulatory summit. Watch out for any sort of comments from the RBA speaker. And then we have the BOJ speaker, Wata, giving a speech in Sapporo. So again, just anything on those fronts. I'm just keeping in mind with regards to the dollar yen on those BOJ speakers. Moving over to Thursday, we've got the U.S. pending home sales. A consensus for that is 0.7%. We also have the DOE U.S. crude oil inventories. and the Fed Speaker Williams. We also have the Fed speakers Nowotny and Koshlikora speaking on Thursday. So just taking a look at the WTI crude oil market, you can see the way the market's kind of positioned at the minute. We had that bit of a move to the downside. We closed below those key 58.42s that we kept speaking about, but after that kind of Yemen news that was putting a bit of risk in the market over risk in supply. We saw that move right back up into this wedge, and now we're trading back inside this area. So for me, we've got this three-bar triangle here. That day's within the previous 2-day range. Bit of a wedge. If we're breaking and holding, closing above this trend line in here, I think there's good scope for this market to test that swing high there, and then eventually those 63.72. So just keep an eye on any of these inventory numbers. Any further draws out of Cushing, any further draws generally across the board, or any sort of risks to supply, you know, we could start seeing that. On the contrary, if we offer and hold below these 58.42s, I think that's going to be a key again. We visited it once, we closed below, we had a risk event that brought us back up here, but if we're back down here again, I think it's going to have little mercy for those that are, just got long now. It'll probably make them puke quite aggressively back into this region. So just keep an eye on the structure. It's looking relatively interesting. Come Friday, not much data again out of Europe. We've got the Japanese jobless rate and the national CPI year on year. We've got the UK GDP quarter on quarter. That's a preliminary number. The US core PCE, taking a look at the inflation number on Friday, and then the US GDP annualized. Keeping an eye on that number. Obviously, GDP is somewhat of a lagging indicator. A lot of the numbers we're getting now, the retail sales, the jobs numbers, they all feed into these massive GDP models that investment banks and funds they're already building in their expectations for this. So it's somewhat of a lagging indicator. Sometimes we're getting some reversals, but when we get these really big outlier numbers, the market does actually recently has been tending to trend. So watch out for these numbers, because when we're getting big outlier numbers, the market is not actually reversing as it used to. Sometimes it's actually going with that trend. So just watch out for these numbers. They could be kind of key. We got the U.S. Chicago PMI and the U.S. University of Michigan Consumer Confidence. That's a final reading. And then obviously after those numbers, everyone's going to be looking at the month-end flows. So just keep an eye on the month-end flows. We've got month-end extensions. I don't know how big the month-end extensions are, particularly in the bond space. I'll have to keep an eye on that, and I'm sure one of the Futex traders or mentors will be posting that up in the week ahead. Maybe I might even post it up on Twitter, so just keep an eye on that. My handle is at MVS_Futex_live. And then just to end the week, just to end the weekly roadmap, just taking a look at my risk and money management plan. Obviously, Monday has not been traded, so we're looking at only Tuesday to Friday. We've got the 3 days with 5 event-driven risks. The relevance, a little bit more relevance on Tuesday as opposed to Wednesday and Thursday, so I'm putting a little bit more risk allocation there, 25%, and then 20 and 20 for Wednesday and Thursday. The majority and bulk of my risk allocation, however, is on Friday because of the month ends. I'm sure most of the Futex traders will be giving a little bit more leeway on Friday, just because that is where we tend to push our size and really push ourselves to the limits there, because we believe we have a very good edge in the markets that we trade. So definitely keep an eye out on that. And then obviously, as a whole, I'd just like to say this is obviously my risk and money management plan. You should also be doing your own. Keep in mind what makes you money, what it is that your edge is in, and allocate your risk and your money accordingly so that you have chips to play with throughout the week, throughout the day, every minute of the day. No matter what it is, if you're stopping out, it should be a horrific day. On the whole, you should be more right than wrong in the market. So give yourself space, but manage your money accordingly. There's been some relatively volatile times. Possibly we might be moving into the summer months, so bear that in mind. If we're seeing more and more indication that the volume and the volatility is dissipating, Start to adapt your strategy quickly. Don't wait because otherwise you're going to be at the back end of the curve. Always give yourself little indications as to what you're expecting. Come 8 a.m. or 9 a.m., how much volume are you expecting to be trading in your market? Has it traded that volume, or is it below par? If it's below par, how am I changing my plan? If it's above par, how am I changing my plan? Keep that in mind throughout the day. Keep debriefing yourself and make sure that you're staying on par with what you gave yourself at the beginning of the week. What did you tell yourself you do? What were your goals on the week? And stick with your plan day in and day out. The routine will bring consistency. Right, so thank you very much for listening. My name's Miltos Savvidis. I hope you guys enjoyed my weekly roadmap, and hopefully when we get together at the end of the week for my weekly market wrap, we can go over some of the things we spoke about now, and we can say, well, our prep was good, and hopefully we had profited from it. Well, thank you very much for listening, and have a good week. Good luck to everyone, and happy trading. Bye-bye.